Okay, today we're going to look at problem 9-1B, entries related to uncollectible accounts. The following transactions were completed by the Wild Trout Gallery during the current fiscal year ended December 31st. And then we have our transactions. Instructions: record the January 1st credit balance of $50,000 in a T account for allowance for doubtful accounts. Journalize the transactions and post each entry that affects the following T accounts to determine the new balances. Okay. So what we're going to need to do this is we're going to need a general journal, and we're also going to need just a blank piece of paper. Okay, so we're doing problem 9-1B. And the very first request was to create a T account for our allowance for doubtful accounts. And record a $50,000 credit. Okay, so we have our $50,000 credit. Now we're going to journalize our transactions. The first transaction, January 19th, reinstated the account of Arlene Gurley, which has been written off in the preceding year as uncollectible. Journalize the receipt of $2,660, cash in full payment of Arlene's account. Okay, so our date is January 19th. First, we have to reopen her account. So we're going to debit accounts receivable and her name, so we can keep track of whose account this is for the $2,660. We're going to credit allowance for doubtful accounts for the $2,660. So that reopened her account. Now we need to pay the bill, so we're going to do a second entry, so we need the date again. We received the cash of $2,660. And that fulfills her payment, so we're going to credit accounts receivable for the $2,660. Excuse me. The next one, April 3rd, wrote off $12,750 balance owed by Premier GS Company, which is bankrupt. Okay, so new month. It is now April 3rd. We're writing one off, so we're going to debit our allowance for doubtful accounts for the $12,750. And we're going to credit accounts receivable to show that we're closing this account July 16th, we received 25% of the $22,000 balance owed by Hayden Company, a bankrupt business, and wrote off the remainder as uncollectible. Okay, so our date is July 16th. Oh, and the first thing we have to do is calculate the amount here. So we're going to use the bottom of my paper. They said that it was $22,000. Times 25%, and that means that we've collected $5,500. Okay, so we're going to debit cash for the $5,500. We're also going to debit our allowance for doubtful accounts for $16,500, and that number, we take the $22,000 minus the $5,500, we get the $16,500. Okay, so this gives us our allowance amount. This was our cash. Then we're going to credit the accounts receivable for the full $22,000 to close that account. November 23rd, reinstated the account of Harry Carr, which had been written off 2 years earlier as uncollectible, recorded the receipt of $4,000 cash in full payment. So November 23rd, we're reopening his account for $4,000, crediting the allowance to pull it out of there, and then we have to show that we received that cash. So a debit to cash for the $4,000 and a credit to the accounts receivable for $4,000. To show that he's paid this, he no longer owes it, we're closing that account. Okay. December 31st, wrote off the following accounts as uncollectible, and then it gives us a list of 4 accounts. So the first thing we're going to do is grab our scrap paper here. Put a line here, and this is December 31st. So we have 3,300, 8,100, 11,400, and 1,200. And we're going to add all these numbers together, and we're going to get, whoops, $24,000. Okay, so this becomes our allowance amount. So in our journal, it is December 31st. We're going to debit our allowance for doubtful accounts for the $24,000. And then we're going to credit each of these accounts receivable accounts for their individual amounts. Okay. Our last entry, based on an analysis of the $2,350,000 of accounts receivable, it was estimated that $60,000 will be uncollectible. Journalize the adjusting entry. Now, before we can do that, we have to figure out the amount we're going to be using for that adjusting entry. So we're going to come back to our scrap paper, and looking at our T account that we started in step 1, it has a balance of $50,000, a credit balance. So now on January 19th, we credited this account for $26.60. Okay. And then on April 3rd, we debited it for $12,750. July 16th, we debited it for $16,500. November 23rd was a credit for $4,000. And then December 31st was a debit for $24,000. Okay. So now we're going to add up both sides. Make my T a little longer. and I get 56,660 and 53,250. And if I subtract these out, I get a final balance, a final credit balance of 3410. Okay. Now our book told us that they estimated $60,000. So I'm going to kind of jump over here to the right, and I'm going to take this $60,000 and subtract the balance we already have at 3410. And I get 56,590, and this becomes the number you use for your adjusting entry. Okay. So in our journal, it is still the 31st. We're going to debit bad debt expense for the 56,590. And we're going to credit the allowance for doubtful accounts for 56,590. Now if we take this 56,590 and put that into our allowance for doubtful accounts, and we add those together, we get the $60,000 that it wants us to end at. Okay. Okay. At this point, you can go ahead and head back to your PowerPoint.